Okay, here's the puzzle for you. Is it possible for a stock to be, loved by Wall Street, but maybe a balance sheet nightmare? Today, we're diving into exactly that. We're looking at a company building the literal future of computing, but it seems caught in this fierce financial tug-of-war. Welcome to D-Risk, a podcast where we provide a no-nonsense analysis of stocks. Today's deep dive is on D-Wave Quantum, ticker QBTS. We're using data from our research captured this morning, August 29, 2025, around 08.42 A Eastern.
Right.
And our mission, to untangle these really mixed signals around this fascinating quantum computing player.
Absolutely. And maybe before we jump into D-Wave itself, let's just quickly set the stage with the macro environment because it's definitely casting a shadow. Pre-market futures, S&P, Dow, NASDAQ, they're all pointing lower. Feels like a definite risk-off kind of mood starting of the day.
Right, a bit cautious out there.
Yeah, and it's interesting because we just got revised GDP numbers, showed the economy grew faster than expected last quarter.
Okay, that sounds good.
Well, yes and no. When you dig a bit deeper, that growth came from some kind of weird factors, like a big drop in imports. Meanwhile, actual consumer spending looked pretty weak. So it makes that GDP number maybe more of a statistical blip than, a sign of real underlying strength.
Ah, okay. So the market's probably looking past that headline number then.
Exactly. Everyone's holding their breath for the key inflation and consumer spending reports due out later today. That's the real focus.
Got it. So with that sort of cautious backdrop, let's zoom in on D-Wave. I mean, this company is literally working on quantum computing. Just yesterday, big news, new developer tools for quantum AI, plus a brand new 6th-generation quantum computer.
And that 6th gen, that usually means a pretty significant leap, right? Better stability and more power. Pushing closer to actually using this stuff commercially.
For sure. And Wall Street loves it. I mean, check this out. All 10 analysts covering QBTS, they have buy or strong buy ratings.
Wow, 10 for 10.
Yeah, a completely unanimous vote of confidence. You don't see that every day.
No, you really don't. But, and this is a big but, here's where the plot thickens. When our models crunch the fundamental numbers, they basically scream overvalued.
Oh. How overvalued?
Well, the fair value, based on future cash flows and earnings potential, it actually comes out negative. We're talking minus $5.39 per share.
Minus. Compared to what's it trading at now, like 15, 16 bucks?
Exactly, $15.92 currently. So a negative fair value. I mean, that suggests, based on projections right now, the company's future cash just doesn't stack up to justify any positive price, let alone $15.
How does it even happen? Is it just pure speculation on the future?
It's largely that. It's a bet on the enormous potential, right? A belief that quantum is so early stage, today's financials are irrelevant to tomorrow's breakthrough. But that's a risky gamble against the current numbers. Don't get me wrong, D-Wave is growing revenue fast, 42% clip, which is impressive.
Okay, 42% is strong.
It is. But it's not profitable.
No.
And the spending is way outpacing that growth. So you have this classic conflict.
Right, the futuristic growth story versus a valuation that the current financials just can't support. Which I guess leads us perfectly into the sentiment story. How's the crowd feeling? Because this sounds like it would split opinions.
Oh, it absolutely does. It's like a tale of two cities. You look at the options market, decidedly optimistic. The put-to-call ratio is really low, 0.4.
Meaning way more calls than puts being bought.
Exactly. Lots of bets. The stock is going higher. Big money seems focused on it climbing past that $16.50 strike price.
Okay, so options players are bullish.
But then, you look at the short sellers, completely different picture. A heavy short interest. 18.13% of the available shares are sold short.
Wow, 18%, that's significant. How long would it take them to cover?
Over a full day of typical trading volume. So these aren't casual shorts, they're pretty dug in.
So here's where it gets really interesting, like you said. A classic battleground. Options bulls versus these really determined bears.
Precisely. And the technical picture, honestly, it just makes things murkier. It's a real tug-of-war on the charts. Well, the trend. Long term, it's still positive, technically. The 50-day average is above the 200-day. That's usually a good sign.
Okay.
But short term, it's struggling. It's below key moving averages, suggesting the recent trend is down.
So conflicting trends. What about volume?
Volume analysis suggests the bears have had the edge. We've seen pretty consistent selling pressure since mid-July, even though there was a recent little pop in buying.
All right.
Completely split. Some indicators are bearish, others just flip positive. It's basically a stalemate.
Huh. Any clarity from volatility?
Volatility is actually calming down a bit. The stock's coiling, trading in a tighter range.
Yeah.
Indicators there are declining. It suggests consolidation. like it's getting ready for its next big move.
But we don't know which way that move will be.
Not from the technicals, no. It's undecided.
Okay, wow. So, putting this all together, cautious macro, this huge fundamental conflict, totally split sentiment, chaotic technicals. What's today's playbook for you?
Given all that, all those powerful forces pulling in opposite directions,
Yeah.
our verdict has to be a wait-and-see approach.
Makes sense. Too much conflicting information for a high conviction bet right now.
Exactly. It's just too risky to jump in blindly here.
So what are the key levels people should watch if they are waiting? What are the battle lines?
Okay, good question. So after hours was trading around $16.05. It's pulled back a bit pre-market to $15.85. For the bulls, the first challenge is reclaiming yesterday's high, that's $16.29. Hold that, and they'll be targeting $16.50. That's where you see that heavy options interest and its key resistance.
Okay, $16.29 and $16.50 on the upside. What about downside?
Downside, keep a close eye on the pre-market low around $15.74. If that level breaks, the bears could gain control and start pushing it down towards $14. That looks like the next major support level, partly thanks to options positioning again.
$14, okay.
Yeah. So our advice is pretty simple here. Just wait for a decisive break of one of these ranges, either above $16.50 or below $15.74 before even thinking about jumping in.
Right. Let the dust settle a bit. You know, in a market this conflicted, sometimes the smartest trade really is no trade at all. Let the bulls and bears fight this one out, and then you can be ready to potentially join the winner later. That's all for this deep dive. Remember, this podcast is for informational purposes only and isn't financial advice. Always do your own research or consult with a qualified financial advisor before making any investment decisions. Thanks for tuning in, and we'll catch you on the next episode of De-Risk.